we're going to go into a period which is slightly more challenging and one that the banking sector will need to manage well. Still an economy that's growing at just under the 5% mark. So we're still talking about not shrinking economy, but a growing economy. We're still talking about key sectors like oil and gas continuing to do well. But the three key issues that one would need to manage through this year is, first is the consumer loans to GDP ratio, which has continued to increase, which clearly our regulators are taking a very close interest in and trying to soften demand. That's the first one, which means loans growth in the retail sector is likely to be slower. Second one is generally the property market. It's one where I think there's increasing supply coming into the market. It has done so in the last year or two, but there's more coming in this year and next year. Important to be very careful about that sector. Third is the fact that as the government starts tackling various issues around budgetary deficits, that will mean that there'll be some further softening of demand on the consumer side. So they are the three big challenges of the banking sector. Having said all that, it's still a stable economy, liquidity is still sound, and as long as the banking practices are sound, I think banks are going to generate profits in the next 12 months. Profit growth in the next 12 months.
Your insurance bill? Hello. will it be done? You have 40 days left. Will you get everything the bill done? End of
Really, that's our with the regulator. We can answer.
Still with them?
Still with them. And there's questions that come out. We can answer them. We don't see any real challenges, but these things will take some time. But we'd like to get this done as soon as possible.
Under revenue?
Yeah, part of the 800 million is what capital return. Part of that will result in some one-off profits, and we're still working our way through how much of that will be one-off profits that will be booked.
So that will reflect in your full year account?
That will reflect in our full year. But it's not all of it, because clearly, there's a base level of net assets we have in the business. There's an amount that we paid away to Friends Life when we repurchased that stake of 30%.
240 million.
So there are some adjustments that we would need to do again.
I noticed the fact that because your result came out yesterday, your general insurance claim, it went up by 300 million compared to the same quarter last year, from 400 to 700. Is that a worrisome thing for all? Just part and parcel of general insurance?
No, it's not that. It's simply a function of the fact that now we've got Purnia for 9 months this year. We had Purnia only for 3 months last year. So it's simply a function of the fact that we acquired Purnia in September of last year.
So the what do you call, once you get your sale of insurance done, so you can no longer book the whole revenue under yours?
Correct. So we would roughly need to share half of it.
Okay, so roughly
and again, it depends on how we consolidate it. So the life insurance business is one that we cannot consolidate. We may not consolidate. Takaful is one that we can consolidate, but also the accounting
50 plus 1 share.
50%. So we can if we wish to consolidate. So we're going to be counting mechanics how to book it, starting 1 April next year.
So basically, what we've been saying before, like the windfall is going to come before the financial years out.
Yeah,
I'll cross your fingers.
Subject to bank guarantees that will coming through. And again, but you do not expect it to be a large windfall for all the right reasons I mentioned, which is we've incurred some cost of sales, would have given some warranties, indemnities, would have paid some goodwill away to purchase the Friends Life stake, and we've got the underlying net assets. All those need to be taken into consideration.
So what's the status of the MetLife partnership?
Our application is with Bank Negara for approval, and we hope to get approval by the end of this financial year for us, which is 31st of March.
So not when the first quarter or second quarter is going to take a longer time than that?
No. We hope the partnership will commence 1 April 2014. But that is subject to Bank Negara giving us approval before March this year.
So does it include a name change or
all those discussions are still underway. So like when we had IAG come in as strategic partner, there was no name change, but we're not sure whether we will or not do that yet. So those strategic elements are still under discussion with our potential partner, but we can't prejudge those outcomes. We just have to wait and follow the process.
So everything is in Bank Negara's name?
For approval, correct.
Just now you noted that one of the challenges this year for the banking industry is in terms of the personal growth, personal loans growth, right? So how is AmBank is going to buffer that, losing that business from that side?
Yeah, look, what I've talked about generally is that consumer loans growth is likely to be softer this year. I'm talking about the financial year 2015. for the industry compared with 2014. But what we've also said is that we pulled the brakes a little harder earlier on to reassess our strategy in retail banking.
Right.
We've now since reaffirmed our asset writing strategies, which means we should expect to see a gradual acceleration in growth next year compared to this year.
Next year and this year.
Next year compared to this year.
So there will be
next
a
financial
decrease
year.
this year, yeah?
Because that we've already signaled to the market for the first 9 months, our retail lending loans only grew at 1.5%.
Okay, so this year, which segment of your business do you see growing this year?
Next 12 months?
Yeah.
For the next 12 months, we expect non-retail to likely to grow faster than retail, which has always been the case. So we've been pushing non-retail faster than retail for the last 4 to 5 years. That is likely to continue over the next year or two. Having said that, we're also expecting retail to slightly do better next year compared to this year because of the brakes that we pushed early to reassess our retail strategy. We've since relaxed that a little. Still tighter than last year, but we expect the growth momentum to kick in a little bit stronger over the next 3 months and the next financial year compared to the last 9 months.
So how many percent for last year?
Yeah, for the financial year ending.
Announce it?
We do actually. So for the financial year ending 31st of March 2014,
That's okay.
we've said a profit growth of 10 to 12%. What we've said is
Profit growth.
yep, profit after tax minority interest, a return on equity of about 14%.
14%.
14%, slightly better than last year. Those are the two main KPIs. We've got a few other things that we have gone to the market with as well.
So what's the
your
target
retail
this
growth
year?
was 15% for the first 3 quarters, in total?
No. For the 9 months, PATMI grew at 9%. PAT grew at about 13%, but some of that is because we've done better in general insurance.
No, I know. I saw your life insurance. You said earnings went up 100%. I couldn't figure that out, actually. I saw the up in premium. Maybe because you got back at 30%, so you're counting 100% the extra.
There's an element of that really that's coming, so which is we booked all the profits this year compared to last year. Last year we also took some provisions for the historical mis-selling agency, which we've talked about in the past as an issue that we needed to overcome. And in a period when interest rates increase, generally speaking, our claims discounting means that you end up making a little bit more in terms of profits.
Can you share with us the target for next year?
Recovering the money, the 3 companies in Singapore, you have to recover the money. How is it coming along?
Yeah, so what we've said at the end of 9 months is that we've taken 50% of our gross exposure as provisions for the 9 months ended 31st of December. So out of an exposure of 120 million, we provided for 60 million. But our plans are well underway. We've collected roughly around 30 million, just over 30 million.
It's an update kind of
Correct.
story.
It's an update. So we're continuing to progress our plans to recover the rest. And the majority of the customers have agreed to a repayment schedule. A minority who haven't are being pursued in the courts of launching.
All right, what's your target for this year, for next 12 months?
For the next financial year?
Yeah.
Okay. So we are working through our strategic plans as we speak. So we haven't yet formally indicated what our strategic plans are. We'll go to the board only in March. When we come back to May, we will come back and when we go to the board in March, we will get our strategies approved. We'll come back in May with further updates. But for the time being, we held on to our previous guidances, which is still a profit growth of around 12% next year. Still holding on to a return on equity that's above 14%, maybe a small increase in return on equity, and maintaining our impaired loan ratios below 2%, which is where we are today. We haven't changed that guidance, but should it change, we'll come back to the market in May after we've got it approved by the board in March.
So you said your non-retail is performing well by this year. So how many percent do you have set any target?
So when I said non-retail, it's in the loan side. So non-retail loans for 9 months grew at just under 8%. Retail grew at 1.5%. So clearly, non-retail lending growth will continue to outpace retail lending growth for us.
So as Tan Sri said just now, the Islamic banking is expecting to grow by this year. So do you have any forecast how many percent to grow?
I beg your pardon, sorry?
Your Islamic banking, so as Tan Sri said, is expecting to grow.
Look, we are putting together a proposition for small business, not SME, but small business. When I talked about non-retail growing faster, the mid part of SME, as well as the top-end corporates are all included in that. It's that segment that's grown at just under 8% compared to retail, which has grown at 1.5%. So clearly had faster growth. coming in from the non-retail sectors,
Both Islamic and conventional.
both Islamic and conventional.
Alright, thank you very much.
Thank you.
Thank you very much.
Thank you very much. Bye-bye.
I have all the questions from lucky I follow your company.